Okay, so we're just looking at gold now, just to do another overview as well on how price moved yesterday. So this is today's daily candle. This is yesterday's daily candle. So the price action we had was this one. So from this price action, when we came to the charts, what we just had to decipher was what's our bias, where is price most likely to go. So on the bottom side, we've got this area here. Then on the top side, we've got this area here. So looking at the price action and how price was being delivered the past 3 days, we had a selling bias. You can see price had been rejecting the 13 for a couple of days now with a huge rejection here. Still sort of the same candles. So the bias was to the sell side. So we're going to drop to the smaller time frames to see how we could have caught the trade. So remember, when you're trading, you're looking for patterns, you're looking for like your MAs, your Ws, continuation patterns, your head and shoulder type patterns, especially if you're selling. So if you're selling, you're looking for these type of patterns, your Ms, head and shoulder type, and the A tops. Okay, so we're going to drop down to the 4-hour time frame. Okay, 4-hour time frame doesn't really show what I wanna explain, because here the period separate the days and not the weeks. So let's see, from around 27th, I think. Yeah, so from roundabout here, that's our week's price action. Yeah, somewhere here. So what price did is beginning of week price pushed up, induced buyers, then they started dropping. So we had an order block here. You can see price came and induced buyers again before dropping. So before a sell again, you should also expect a stop hunt high before the price drops. Okay, so let's drop to the H1. Let's see what we have there. Okay, so on the H1, looking at the previous days here, okay, this would have been our area of interest. Okay, from this particular day, which was Monday, Tuesday, Wednesday. Okay, so here you can also see we had this order block here. So remember, we had a selling bias from a higher time frame. So on this particular day, which is yesterday, we were expecting price to trap higher before we actually consider taking the sells. So if you see what happened, they actually pushed down first, showing that hand where they actually wanted to go, then took everybody out who was trailing, even with stop losses here. Even those who entered the previous day with stop losses there, they were taken out. But remember now, if you know the bias for the day, you just simply have to wait for your particular setup for your direction to play out. So what we would have been looking for was for price to violate the Asian highs, mainly, but violating the previous day's high was just like an added advantage. Okay, so there was buying liquidity above these Asian highs, buying liquidity above the previous day's highs. So after you have that information, you drop down again to M15. So M15, you're just waiting for price. I think M15 is best if you mark like your sessions. So on yesterday's data, we had our Asian highs here. Okay, so let me actually do this. This was the Asian session. So when you're day trading, obviously, when you come to the charts, if you're trading London session, what you're waiting for is for dealer to violate Asian highs. Okay, let's see if you can write it. Okay, that's the Asian high there. Then we have the Asian lows. Okay, so on a day when you have a selling bias, you are waiting for price to violate Asian highs, trigger people to buy. Then look for your pattern. It can either be an M, it can be an A top, can be head and shoulder, or it can be one of the patterns which we speak about where price pushes up, breaks the structure, pushes back up for an order block or fair value gap before you take the trade. So that's what you'll be looking for. So when you came to the charts, you can see this is London session. This is New York session. So London session beginning, you can see price came down, sorry, violated the Asian low. So this was triggering the early sells, right? But because you know that you're waiting for the Asian price to be violated, you just have to be patient for your trade. So at the end of the London session, you see price then came up, violated Asian highs with the huge impulsive candle. So what I want to do is, okay, this little green line in here, I'm not sure if you can see it. It just shows the previous day's high, which is yesterday high. Then the red line on the bottom shows the previous day's low, yesterday low. So if you see price activated liquidity just above Asian, then they went as high as violating the previous day's high. You can see then price got stopped by this 800 EMA. So what you need to do now, since you now see that your setup is falling into New York session, you want to mark the London highs. So this is your London highs. Okay, you can mark them into the future if you want, but you can just mark them to where you see price get pocket. Okay, then we have the London lows. You can just either use the order block or just mark this area here. Okay, the low price for London was, however, this one, but you can see it was a rejection candle. So I'm just going to mark my zone from these two candles, but it's still okay if you mark from here, that's still fine. So after you mark your London lows will work as you target. Okay, they'll work as you target. Then, so once you see price start to reject, first sign of exhaustion, you are looking also at the TDI. Second sign of exhaustion, then you get this price action here. If you look at your TDI, one leg in the band, one leg out. We also have like a divergent setup there, higher highs on price and equal highs on TDI. That's a divergent setup. So that signals that a sell setup is actually playing out. So what you simply do is, soon as you start to see this rejection, remember price is violated here. You drop down to a smaller time frame. So you just also have to mark your areas. So we're saying, after seeing these two candles, you drop down M5, M2, M1. Okay, M5 was looking like this. If you check M5, we already had a nice TDI confirmation there. We've got price creating higher highs. Then we've got TDI with one leg out, one leg inside the band. Then we've got this little M here, right? That's this pattern here. So the safe entry would probably be to wait for price to close below the 13. By that time, price was below the yellow baseline. It squeezed that signal the sell was valid. So you could have entered a sell there. Okay, so this is also based on BTMM. Okay, you could have entered your sell right at the close of that candle, targeting the London lows, right? So that was your target range with the stop loss slightly above the day's high. Okay, so if you're checking it on a risk to reward basis, okay, that was 1:4, 1:2. Let's see if it was almost 1:5. Okay, the trade played out. So the other way you could have looked at it is drop to a smaller time frame, like 2-minute time frame. So when you drop to a smaller time frame, now you're looking for the other pattern we talk about. Okay, once you see your price coming up, right, there's a break of London highs here, a nice break to the top side, which is aggressive. So all buy side liquidity here has been triggered, and buy side liquidity above the previous day's high, which is yesterday's high, has been triggered. So what you wait for to signal that price is reversing is for price to break your structure, which is this one. Okay, so you can see the candle which broke the structure was this one. Soon as you see this break of structure, you now know that there is a high chance that the high of the day has been set. So it's 80% chance that HOD is set. So now you wait for price to pull back up into either an order block or a fair value gap. Okay, so let's see if we can zoom in. Okay, on that same area, you can see the order block is this one. Okay, fair value gap. You look at this candle here, 1, 2, 3. It's like 3 candles. Then the distance between the spike on candle 1, which is the lower wick, and the spike on candle 3. That gap in between, that's your fair value gap. So you can just draw it into the future as well. And now we wait for price to come to our order block and fair value gap, one of the two. So as soon as price gets into the order block and we get this close is rejecting off the OB, it's rejecting off the fair value gap, right? So you can start entering there. Hence you can see when we mark this risk to reward ratio, it can actually be adjusted. So a smaller time frame just allows you to have like a lesser risk. Okay, then your stop loss goes above the last zone. You see the last high. Okay, so price still came up back into the fair value gap, but as you can see, it was just rejecting. So as long as your stop loss is above your last high, then it should be safe. Then from there, this was another confirmation here. So this is another structure getting broken and price pulling back up again to give another chance for entry. So even if you drop down to as low as the 1 minute, okay. So on the 1 minute, it's more or less the same thing. As you can see, zoomed into where we wanted to see our price action. So the first thing is you want to see London highs here. Get violated, right? So they got violated at NY with a nice impulsive move. Then you want to see a structure get broken, break of structure here to signal for you that this is now a setup in play. Okay, then when price pulls back into an order block or fair value gap, that's when you actually enter. That's where your entry is. Then your stop loss goes above the previous high or slightly above the HOD, whichever is fine with you. So you put your stop loss. Then if you see, we had another break of structure. Like I say, price came back to retest this particular order block. So within that whole setup, there was also another chance to re-enter, which was here. So you can see price dropped of structure. So let's see if it got here. This was actually the first target. So you could still take profit here even, because from here price can actually push up. So you can still have you take profit one right there. So they pulled back up, gave another chance to enter. So you could have still have entered a sell in there. Now stop loss goes slightly up above that area. If the TP was the same, then you see that the second entry risk to reward was 1:10. Okay, so if you go back to a higher time frame like M15 just to see it from a higher time frame, you can see this is how it played out. So that was like your M pattern, a variation of the M pattern with one extended leg on the previous day's high. So this is like a signature trade, also rejecting off the 800. Price fell all the way to this order block here, which was on London lows. They didn't really touch, but if you can see that this is your order block, that's where you can actually take profits or close your trade. So TDI also confirmed the M there, 2 confirmations. And basically today, price action was more or less the same, looking for sells. So this was Asian. So you should also take note that sometimes you've got a trap above Asian, like what happened here. Sometimes you get a straight away trade whereby price just like respects the Asian range lows. Okay, so same thing when you come to your chart, you want to mark Asian high, Asian low. So, okay, that was the Asian session. Asian highs, Asian lows. So this type of setup, if you follow BTMM, this is the AR Asian range bounce. For it to be valid, your price needs to be reacting off the 50 level on your RSI or TDI. Then on your chart, your price needs to be rejecting off the 50 EMA, just like this. So 1350 cross also, that's your IG 50. So these are all confluences showing you that, okay, today the price won't actually go up. So to help you with that setup, also what you need to do is to just mark at the beginning of London session. You can see this was the order block. Okay, then price pushed down to break these lows. So you've got an impulsive move there and you've got a selling bias. Selling bias is coming from our daily view. So remember daily, we said we're pushing towards that level there, this level here. And this was yesterday's price action. This is today. So today price just pushed up a little bit and started dropping in a continuation pattern. So M15, once you figure out where you're going on a higher time frame, you come to F15, put your order block. Then so here you wait for two things. For this to be valid, prices to reject off here. If price had come up here, then we're looking for a possible rejection, maybe around maybe the middle of the Asian range, or maybe on the 200 EMA. But then price reacted off the 50 TDI. We were below the 50 level, and we've got a nice shark fin signal there with a BLB bounce, which is the baseline bounce. So price is retesting the baseline and we're below the 50. So that's a strong downtrend there. So if you want to drop to a smaller time frame, maybe to be able to catch this particular trade, remember you already have your order block drawn and price is broken here. You just drop. Let's drop to the 2 minutes. Let's see what we have. Okay, so on the 2 minute time frame, after drawing our order block, you see price dropped. This was the first drop. So this is our point of interest. So that's an order block within an order block. Okay. So after that push down, we patiently wait for price to come into our OB. Okay, so price then came up but didn't get in there, pushed down, came back up, inducing more buyers. But you can see as soon as they got into the OB, they were met with the 200 EMA. A nice rejection there, then price started to fall from there. So inside that move, there was also like chances to enter. So with each impulsive move, price now leaves an order block. Order block. Order block. These are candles in here. Order block. Order block. So it sort of gives you like chances to re-enter your trade. So from the first OB here, price dropped, retested an OB, dropped, retested an OB, dropped. Didn't quite get there here, but there was a fair value gap here. So that was a retest and a drop. So you can target this area as your TP. As long as you look to your left and you see a level, you can use all those levels as you take profit. So going back to M15, you see that price is approaching that level we have from the higher time frame, from the daily chart. We are almost there. So if you are selling there, you could just possibly target that area with stop loss above. I think this spike would have been safe for this particular trade. Okay, so that was a London session trade. So in New York, two things can happen now. Price can either continue dropping to attack sell side liquidity below this daily level, or price could reverse into the 50 or into the 200, but that we have to wait and see when New York starts. So if we get a reversal, then you know you need to mark your London highs. Okay, I'll just use this. Okay, you mark your London highs. That's an area which is like a target. If you get a pattern here, you're looking to target that as you take profits. If you get a pattern here, you're looking for a continuation of price to the bottom side. Okay, if you check, we've got some news events here. So we could see price moving as well. Like on the dollar, we've got some news events at 1430. 1545, 1630, 1730, and 1800 hours. So we should see some volume there or some volatility. So we just have to wait to see whether, okay, price, you see it just like spiked. So this would have hit to take profit there. So now you just wait for New York. Not sure if there's something here causing this little volatility. And New York session hasn't started yet, so dealer could actually be extending sellers to jump in here whilst they know price will reverse. So you just have to keep an eye. So you mark your London lows, then you want to see how price acts on those lows. Is it rejecting? Is it a continuation pattern, or which is which? But otherwise, the full view which we had from the daily, I think it completes, or it has completed. So now we simply have to wait to see what the dealer wants to do. Okay, so you can see what the target was from yesterday or from Monday. So we had anticipation of price to move here. Price is there already. So now what they can do is they can come slightly below, possibly pull back, reverse in the afternoon and continue, or they could actually reverse the price. So we'll see as time goes on. So I'll be back maybe tomorrow with an update on how the prices moved. Then maybe from tomorrow, which is the 1st of July, we can start having some DMR sessions like we used to, which are our live trading sessions. So for that, we'll be trading London session. So those who can join us, you can just plug in, then we can bounce off ideas. So if you have additions, subtractions, feel free to join. So from here, maybe you might say, where's the price going, or where might it go to? We've got sell side liquidity there and sell side liquidity there. Those are also targets. So if our sells should continue, those are our target areas where we'll see price possibly a reverse. And ultimately this one. Okay, yeah, something like that. So it's more or less of just checking what price did on the left hand side, then try to get where it's trying to go to. So you can see here, we could possibly be heading there. So let's wait for New York for a possible reversal or continuation. Then we'll give updates tomorrow. Then from tomorrow, we'll start having the live session. So I think we'll be live from 9 a.m. SA time. That's when we'll be on the chat. So we'll come in slightly before, but we'll be possibly streaming from 9 a.m. So the links, I think we might use Zoom, so you can request the link for the link via Telegram. Then you can share this with friends. You can share your comments, your views, additions, subtractions, so that we all learn. So I hope this video helps. Have a good day.